stripes and bright stars through the perilous fight. O'er the ramparts we watched were so gallantly streaming. And the rugged red land, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the
Very good morning to you on this October 16th, 2025. This is World HD, live each weekday, 8 a.m. Eastern Time, streaming live on X, Rumble, and YouTube. And today is Equity Thursday. So looking at the stock markets, we've been looking at the stock markets a lot lately. Obviously, you know, at or near all-time highs, lots of volatility, a lot of things going on this last week. We saw big volatility on Friday, and then big volatility on Sunday night as the markets reopened and rallied big. And then some sell-offs yesterday, a little bit of up, a little bit of down. Actually, a lot of bit of up, a lot of bit of down. So I don't think that that's going to go away until the end of this month. And that's kind of our theme, right? It's a lot of choppy stuff in the stocks. So it's a good opportunity for us to look at some other markets. So, you know, tomorrow I want to get into the soybeans, right? We've talked about the soybeans and using that as a tool to see where things stand with China, right? As we go into this 90-day extension or truce, which we're going to talk about today with Scott Bessent, this 90-day extension that ends around the end of October, early November, then are they going to kick this thing back off again and stretch it out into February? That's kind of what Scott Bessent was alluding to yesterday. We'll dig into that, look at the clips, make a decision for ourselves here, see what they're thinking, and what does it mean, right? What if that happens? I think that one of the big things is, if you watch, this is a decent rule of thumb, is that, you know, a lot of good advice, right? Here's some good advice that I hear from well-seasoned fund managers all the time. They put together their wish list, right? So they go through and they say, boy, if I could get this cheaper, I would buy this, right? So essentially walking through the store and looking at all the merchandise and saying, if that goes on sale, these are the things I'm going to buy, and creating that wish list. And then being patient enough to say, I don't really need those. I don't necessarily need those things, but if they go on sale, that's what I want, okay? And in some ways, the fund managers need this stuff, okay, because that's their job. They have to be buying this stuff. They have to be adding higher quality stuff into their portfolio and taking out the stuff that isn't working, right? That's really their goal. So with that in mind, I think I like to do it a little bit differently, because I just like to look at the opportunity as not as much as putting together a wish list, if that makes sense. I guess that's why we do the show, right? Is to get this big picture view and understand, like, okay, Europe, weakness. What does this mean with the euro? Okay, Japan, what does that mean with the yen? You know, what does it mean with these debt markets? What's going on with energy, right? What's going on with crude oil? What are the Saudis doing? What's President Trump doing with the Saudis, right? What's going on with Israel? What's going on with Russia, right? We see India. We're going to talk about that today. India taking the stance to say, yeah, we're not going to buy Russian oil. They didn't give a time date yet, but they did say that they're willing to do this. So what's on the table? What's in the negotiations? We're going to kind of break that down. But look at in South America, what does that mean agriculturally? What does it mean energy-wise? Rare earth metals, right? Now rare earth metals are a big thing, right? That's a big topic of discussion right now. And these things always seem to cycle, right? For a while it's biotech, then it's, you know, high-tech AI, then it's, and, you know, ethanol was a big thing. See, we can't forget that ethanol was a huge thing in like 2007, 2008, 2006 to 2008. to the point where they were taking all the corn. And we've talked about that in here lately, and we did a little bit of work on that with the RBOB, thanks to Trumpet, looking at that stuff and connecting those two things up, right? So all these markets, different things come in focus at different times. And so that's, in the stocks, can they take a back seat to some of this stuff? We see gold, right? We see the rare earth metals. We see this gold. I mean, we want to talk about that today too, because it's making me rethink this whole thing. Dig into this because the way this gold trades is just not normal. I mean, so I look at momentum and I have these readings. So anything above like quote unquote this 67, right? And anything above 67 and it becomes momentum. Anything above 80, it becomes what I call momentum, but it's a special kind of momentum, torque, right? Torque 1. And anything above 90 becomes torque 2, right? Just to give you a reference, right? Momentum is above 67. So it tells you like, okay, that's a pretty strong market, right? Momentum means lots of power, lots of force, behind something. This gold has been sitting at 99 on almost every time frame. The hour, the 4 hour, the daily, the weekly. The shorter term constant volume bar stuff. I mean, it might trickle away for a little while and go down and you might lose it for an hour or two. And then it's right back on that 90, above 90. And it's not at 90, it's at like 99. It's just as high as it can go. It's just sitting there pegged. So I want to go through that and figure out. And after a while, it's like, again, I've never been against gold. I'm just against the high fees, and I'm against the promotion of how they promote it, right? Because again, there's vultures out there, right? I'm not against gold. I'm all for gold. I'm all for silver, right? I'm all for these things. It's just, and we'll talk about that. Trump had asked a good question yesterday. We'll talk about that when we get the charts. How do you get this? What do you do if you want to? And the question is, do you want to take physical delivery of it? Do you want it to be private? Do you want the government to not know you have it? Well, then you have to take certain, you have to have a certain strategy. If you don't, then you just want to buy the ETF because what's the point? I mean, if the system, make that, to me, it's that simple, right? If you want to take physical delivery for, an event that may happen, right? And you want to have gold and silver or metals or something, that's one decision. Everything else is another decision to me, right? Because you're not going to have privacy and you might as well get the lowest fees possible if you're trying to get exposure to it. Because if it breaks down, do you really think that gold sitting in a vault in Australia or New Zealand or, wherever it sits, you really think you're going to be able to, you think they're going to send that to you? You know what I mean? If things break down. So the point is, like, I think that's really the decision to me. And so the key is if you're not going for taking possession of it, then you might as well get the lowest possible fee on it. Okay. So that's how I break this down. But there's something going on with this gold because it's just day after day after day, and it never comes off this boil, right? So that's what we want to get into today. Make sure I have volume and good. Okay. So good morning. Good morning. So I actually had a minute to spare today, so I actually put good morning in there. So it was kind of nice. If you see me write something in the chat, it probably means because I have like 20 seconds to spare. All right, so we got good morning, Trumpet. We got Rachel Hawk, top of the morning to you too. I got your emails, and thank you for that. I'll get back on that stuff. I was busy yesterday doing a bunch of stuff. Geo Rich, but I appreciate all the information you gave me on that. I'll be back in touch with you. And good morning, Frank. Good morning, Geo Rich. Okay. All right, so let's get after this. So we got government shutdown day 16, and we talked about this yesterday. Likely the window is the end of this month, along with a swath of other things that come together at the end of this month. We've got the government shutdown possibly ends, and could this be based around that healthcare situation and how the public perceives it? Right now, it's not. Right now, it's maybe putting a little pressure on the public, but it's not a lot. Does that change? When does that change? That will actually get the government to take action. And the beauty of this is, look, we still hold the power, the people. If we realize that this is not good, okay, then we can unite and we still have the power. Now, that can change. If we're not careful here, we're in a very susceptible situation. At the end of the show, I want to show you the quantum computing and just show you how powerful this is getting. And we have to make sure our leaders are doing a good job and hold them accountable. And that's really what we're going to do today is take a look at Scott Bessent and see if we should be if we should be trusting him or holding him accountable, because there's a lot of power that's sitting out there in this AI and this quantum computing. We have to be very careful with this stuff. So I want to kind of, at least quantum computing is very complex. I was reading through it and I'm like, wow, this is heavy stuff. And I was like, yeah, I'm not going to go into that today because it'll be like, wow. But at some point we should probably break this down, or at least just pull up quantum computing, and you'll get a feel for this at the end of the show. All right. Okay. So then, Okay, so government shutdown, and then not only that, but think about all the pent up government based economic data that will get unraveled. Okay, if we actually go into this government shutdown, how will they let that? They're not going to dump it all in one day, that's for sure, and they won't even maybe have it calculated. So, what is that going to do to markets? Is that going to push things out? Remember, we also have the Federal Reserve meeting at the end of the month, so they're not going to have this data. It's not looking like they're going to have this data unless something happens in the next, really by Friday. Maybe early next week. If something doesn't happen, I don't think they can put any data out before the Fed meets because it's too rushed. Okay. So anyway, so the Fed's going to go into the end of the month making this decision without the data. It doesn't really matter. They're on autopilot. They're going to do this. The odds of them not doing a rate cut in October is almost probably really low, like less than 3%. It's 97% chance that they will probably do it. I mean, it's really high. And then we've got December. Okay, so then that's when all this data release is going to start leading to December, and that's pretty much baked in too. Okay, and we listened to Paul Tudor Jones yesterday talk about that they think that this is. I think consensus is around 3.25, something like that. So if we're at 4, we're talking about 3 more rate cuts, maybe 4. He was talking about 2.5 to 2.75. So that's 2 more rate cuts sometime in 2026. So, and it's about the end of that cycle, not so much this rate cut or that rate cut, but where are they going to end? Because that's what the markets are going to start building in. Okay, they're going to say, okay, October's baked in, December's baked in, probably January, February, March, something's baked in there, and then what about like March, April, May? Are they going to accelerate it? What would happen to the economy? Will the market sell off? If the market sells off, more than likely they're going to get even more pressure to cut rates. So it's why, what is this market going to do? And that's a good thing. We have these harmonic structures, right? We had them retest those levels. So we've got something to lean against, okay? Even though this market's sitting at or near all-time highs, we do have some reference point, and that's always good to have some reference point. Okay, and then the other thing that comes the end of the month is new Fed chair, okay, is likely to be announced in that window. I guarantee they've been interviewing. It's probably going to be Kevin Warsh. That's my number one selection at this point. I could be wrong on that, but I suspect it'll be Kevin Warsh. Second line is probably Kevin Hassett. And then there's a swath of 5 or 6 people that could be third in line, including the Stephen Moran. And Stephen Moran was on the National Economic Council, big advisor to the White House for economic stuff. And then they slid him into that FOMC spot, okay, to influence and bias and get his voice out there. Now, he's been talking about massive rate cuts. And then yesterday he came out and he's actually said he didn't think that maybe they needed to do 50 basis points, or he was backing off of this cutting rates a lot. So we have to watch. He's out twice today. He's going to be speaking this morning. We'll take a look at that in economic data. He's out speaking this morning, and then he's out speaking again this evening. So two speeches out of him today, and I think he's a big one. Austin Goolsby's a big one on the FOMC board. I think this Kashkari has a potential to be a big one. And then we have Chris Waller, right? He's another one that's also in the mix for Fed, but I think he kind of blew it when he didn't dissent last time. And so he was just out this morning on Bloomberg talking about tech, AI, and these kinds of things. So those are the lots of Fed speak today too. So we'll show you that here in a second. And then the other thing at the end of this month is this China resolution, that 90-day extension from August into end of October. Will they kick the can down the road and get some sort of an extension? And you can see there, if you happen to be watching anything in the financial space, you can see that there's a lot of words flying back and forth between the U.S. and China. And the other thing I've been talking about, especially when the tariffs started to come out, was you could see pretty quickly that they were trying to not make this about the U.S. against China. They were trying to make this about regions or the world. I mean, ideally, the world against China would be great. But I think what they started to do was whittle away at these tariffs and say, okay, let's strike a deal. Let's cut Vietnam. Vietnam didn't get a great deal. Okay, it didn't look good on paper, but there's some other words. There's probably deals underneath the surface, right, that are cut. We'll do this, we'll do that. Here's the tariff deal we want to put out in the public eye. We want China to see. We want to exert pressure on them. So I think that's what they were doing. Everything leads that to believe, and now we're actually seeing them say that, okay? And we'll see a clip in here today where, thanks again to Rachel for getting the clips up and running, because this is very helpful. It really is very helpful, okay? And then And we'll see Scott Bessent. He comes out and he just directly says it. This is the world against China. Okay, so that's the thing. We've been on to that, and they're continuing to put that pressure, and it's smart to do that. Okay, to exert that will. Now, I question some things on the other side too, and we'll get into that today. Okay, let's take a look at these earnings. Let me get over here, and so I still have this thing that isn't working, so I'm going to have to do this manually, which makes it a little less efficient, but that's okay. All right. Oh, maybe. Is it not working? Let me see. I doubt it. Oh, look at that. It fixed itself. Technology. You have to love it. You absolutely have to love it. Okay, I have no idea why, but it's working now. I just saw the little thing up and it's working. Okay, here we go. I'll take it. We'll take it, right? We'll take it. Okay. Maybe it's working. Okay, there we go. So this was yesterday's data, Wednesday. We're going to start getting back into this. We lost our U.S. data, a lot of it. Okay, we're getting some of it, so we have to pay attention to some of this stuff. All right. I see one thing wrong already. The Empire State's Manufacturing Index is red. That should be green, right? Because it came in better than expected. So that's my issue, not the technology issue. Okay, so we had new loans yesterday out of China, expected at 1,490 billion, and it came in at less than expected. All right. Watching China. I know this probably doesn't mean much, but it does if we put it in the context of China isn't getting that foreign direct investment that they're so used to, right? That's what built China from the 1980s and the 90s and the 2000s and the 2010s. This whole push by, again, Kissinger, Brzezinski, Old Man Bush, Bill Barr, right? That whole cadre of people setting this whole situation up through Hong Kong to create trade around the world using China as a cheap labor source and to give China control, right? And everybody went along with it with the idea that China would come along and it would help everybody's economy, right? Because China would be buyers of everyone else's goods. Little did everyone know, or little did all of us know, that China was just going to be a cheap goods producer that dumped things on the market and a antagonist to some degree, and maybe not a great friend of the world, all right? Have we been as well? I mean, these are all things we can question, okay? But what we're watching this new loan for is to see, are they able to function without this foreign direct investment? How well are they able to function? And this is what Scott Bessent has been saying. China needs to turn inside, right, and establish their own economy, okay? Get their own consumer. It's kind of like local, right? Someone says, how can you have a great country if you don't have great local communities? So the better your local communities are, the better your state's probably going to be. The better your state is, probably the better your country is going to be, right? The more good states you have that are doing productive things, the better your country is going to be. So it's that same kind of a concept with China, I think, trying to get them to turn inside and reevaluate, can they function as a country without doing the things that they've done, okay, which is dumping goods, getting orders and dumping goods on the system. All right. We had this German 30-year bond that came out. And again, the yield was a little bit lower than expected. It was expected at 3.25, came in at 3.17. The bid to cover was expected at 1.8, came in at 1.4. So a lower bid to cover means that people aren't showing up to buy that debt. So even though the yield was slightly improved, meaning down, people weren't demanding a higher interest rate. We've been seeing this. I mean, the reason I do this is so we get this theme that there aren't that many people showing up to buy this debt. And we look at our 10-year note, we look at this, it's sitting that upward sloping trend channel, and, it makes this move. We've got this level in this 10-year note, 113.18. If it can clear this 113.18 to 113.20 level, it seems to me that this 10-year note, if it can hold above there, this thing has some room on the upside, right? Up into at least the 114, mid 114, something like that. That fits with these yields coming down, okay, sort of. The problem with the 10-year note is it doesn't always relate to what the Federal Reserve is doing. The Federal Reserve has more control on the short end of the curve, the 90-day interest rates to the 2-year note range, maybe even into the fives, not always from the 5-year note to the 10-year note, okay? It's sort of like, it's distant from there. There's other things that drive those 10-year notes and things like that. Not to say the Fed doesn't have an impact on it. It just doesn't always have an impact on it. It doesn't have to have an impact on it because their goal is to really control short-term interest rates or have an influence on short-term interest rates. Okay, and then this is that one that it should be green. Empire State Manufacturing came in better than expected. And then today at 9:30, we get Moran, Waller, and Schmidt all talking, FOMC members, and then IMF meetings have been going on. This is getting interesting. This IMF and World Bank is it's definitely picking up in intensity. There's a lot of stuff going on around the world, and the IMF is heavily involved. Has some of their arsenal been taken away? Okay, are they more exposed, and are they trying to re-exert their influence? All right, in not such a great way. So again, another story we can do, another thing to research. But I'm watching their activity level, and it seems different than what I've seen in the past. So anyway, just watching that kind of, is it worth doing a story on it? Is there enough of a change on that to actually dig in and take a look at it? Or is it the same old, same old? It feels to me like something's changing. And then we had, okay, so this was yesterday. Moran, Waller, and Schmidt were speaking yesterday, right? Okay. And then today they're going to be, I think most of those guys are speaking again. So I'm kind of getting confused between yesterday and today. Okay. Then we had the Fed beige book out yesterday at 2:00. And then it didn't have that big of a response, I don't think. I didn't even notice it. I saw that it came out, but I had my volume turned down, so I didn't see it. But I didn't see a big impact on the market. The market was swinging around quite a bit yesterday, stocks were, but it didn't seem to be off of this. Now, it may have weakened the 10-year note. I saw the 10-year note kind of get up around that 113.18 and pull off again. It may have had an impact on that. I'm not sure. I'm not sure I can equate the two, but usually this has a pretty big impact. At least it has in years past. It doesn't seem to be having one now. And this is part of that dissipation of the Fed. Okay. Australia had weak employment numbers last night. I think I was watching China news last night, financial news, while I was watching. I also had a baseball game a little bit, but I was watching that. I was doing some work, and I think this was like one of the lowest readings in quite some time on the Australian employment numbers. Why does that matter? Because again, Australia is close to China. Is there a rollover effect into China, from China into Australia? We talk about this currency. We're watching the Australian dollar currency to see what it's doing. Is it a heads up to us of what's going on in China? Again, back to China creating that own internal demand. If they do that, would we see that show up potentially in Australia? Less jobs, less need for things coming out of Australia going into China, raw goods. All right. Okay, then we've got this stuff. Let's take a look at what we've got today. We have, UK GDP was expected at 0.1, came in at 0.1. That should just be white. I'm not sure. Everything I just left and read. Okay, here's another one. Spanish 10-year bond auction. Again, slightly lower yield, 3.23 is where it was expected. It came in at 3.09, so that's good. The problem is the bid to cover fell. 1.9 came in at 1.7. It's the same concept we were just talking about. Today at 8:30, we get the Philly Fed manufacturing. If I see that pop up, if it's significantly different, and we've seen this number bouncing around. We've talked about this manufacturing index in terms of the banking sector, and especially the regional banking sector. So if we see this manufacturing indexes pick up, that would mean, again, Russell 2000, regional banking. We saw the big banks come out and beat, so they looked really good, okay? And they tend to, right? I think it's a good environment for them right now, and I think that they can also massage their balance sheet better than others. Regionals can't do so as much. So keep an eye on these manufacturing indexes, see if there's a trickle through, right? Trying to forecast, to be out front of this stuff. So that's why we watch some of these things. Okay, here we go. Here's today's FOMC speakers. We have Waller, Barr, Moran, Bowman, all out speaking this morning. And then tonight again, Moran and Kashkari will be speaking later in the day. And then ECB President Lagarde's out speaking. Why does this matter? Because all this stuff that's blowing up in France. Does she comment on that? She's probably letting it work through right now. We'll get to that. There's a short story on that one today too, or at least an update. And then we get crude oil inventories today expected at 0.3 million barrels. We've seen supplies building in there, and this has continued to put downside pressure on the crude oil market. And again, that 63.18 is that key level in the sand for us. All right. And I don't think we'll take a look at that today, but maybe we'll take a look at energy tomorrow as well, just to kind of I want to lay that harmonic structure out on there and just kind of see where we're at in the scheme of things and what it projects down to, and if those are actually achievable levels. Okay. That's that harmonic structure I'm not a huge fan of, but nonetheless, it's in play. Okay. It's in play. All right. And then we've got headlines. Do we want to get into this now, or? Think so. Do I want to take a look at some charts? I think let's do this. Okay. So government shutdown, day 16. Big bank earnings came in strong. Okay, revaluation of gold, this 5,000. So here's the situation. People, I've heard this word popping up a lot lately, debasement. Okay, so what does that mean? Debasement of the currency means people piling into gold and silver. I don't think that's what's happening. I'm watching these currency markets pretty closely, and I just don't think that that's the case. The dollar came back. Maybe we'll look at that today too. The dollar came back and tested this level on the 4-hour chart. We talked about, can it break above this resistance? And now can that become can the ceiling become the floor, right? That's where we're at on this dollar shorter term. I was kind of hoping it wouldn't come back and retest this level. But maybe longer term, it's a good thing because it gives it a better base if it holds here, right? So again, the dollar's always hanging by a thread, always, and and every time it gets a chance to not do that, it's almost like somebody just keeps coming and buying this euro, even though it's a complete piece of junk. They just keep coming in and buying this thing. It's been going on for decades. It's just, it's very, very odd. I've talked about this in here before. If you flip a coin, if you have an equally weighted coin and you flip it 1,000 times, it's pretty much going to come out 500 heads and 500 tails. The euro, the ECB, the coin that they flip to protect this euro is at about 980 to 20. Okay. I mean, it's so skewed, it's not even funny. Every single time the euro goes higher. And guess what happens? In the media, in the news wires, they come out and they bash the dollar, right? Because they're paid to. All right. If we look at this dollar, the trend is up on this thing. We're at this converging triangle. It's above 95. We've been through that so many times. Now what we're doing is we're going at the microscopic view, taking a look at this dollar to see, can it start to hold? And can it start to make its way back up to that 100 on the index to see if it can actually, if that starts to happen, I think it unravels a lot of things around the world. We've been seeing this stuff happening in Argentina, right? There was this $20 billion swap that got created. And I'm working on this story, but they increased it yesterday to 40 billion, right? So, and in Malay, I'll see if I can pull this clip. It's it's being translated, but the guy's a character, and he plays the game too, because he's like, oh, it's not a loan, it's not this, we're just swapping currency. There's nothing wrong with swapping currency. Well, yeah. When your currency's falling apart, you know what I mean? You're swapping it up for dollars to create stability, and we're buying your pesos on the market, to basically prop it up. That is sort of a loan, you can call it what you want. You can call it whatever you want. So he's playing the game for sure, right? I mean, the game that all these characters play. All right. But here's the key with this. I don't think that that's the case, that the dollar is being devalued. I don't think that's but I do think there could be a revaluation going on in here. Okay. And so, like I said, this market's pegged on the momentum. If I could show you, I would. I just don't think I don't think I have a way to show it. It doesn't really matter. 99 is 99 is 99. It's on every single time frame. This thing can't get more pegged. It's like running a car at the red line. It says, oh, you can go 7,000 RPMs and it's in the red line. And this thing's just sitting in the red line, just nonstop, just holding the 7,000. It's just running like crazy, and it doesn't back off. And when it does, it's a quick, sharp move, and then they come right back in and buy it. And so what I'm trying to say here is it's almost, so there was a rumor out there that they were going to revalue this gold and take it to 5,000, and then take all the gold that's supposedly sitting in Fort Knox and give it a new valuation, and that would equate to $1.5 trillion, somewhere in that price range. And what they would do is use that then to lever that against our debt, right, against our balance sheet, make things look better on the global market, along with this whole Genius Act, Clarity Act, where they created these stable coins. And with every stable coin that gets created, you have to buy U.S. Treasuries. So they're trying to create demand for these U.S. Treasuries. They're trying to create, and prop things up, right, to get out of the hole that the prior administration left us in, to leave it short. Okay, so there's rumors that they talk about taking this thing to $5,000 an ounce. And I'm, you just don't think that markets can trade like this, okay? Because it's just this is very odd. This is definitely a tail event, all right? And so what are we getting here? Let's see. Markets are bouncing around a little bit. Let's see if we're getting something in this. Oh, boy. How do I get that thing to come up? Here we go. The thing reset on me last night. Okay. All right, so it was expected at 10, and it came in at minus. Let's take a look at this. I think is it this one? No, it's this one. There we go. So you can see the Philly Fed came in, it was expected at minus 12.8, and it came in at no, it was expected at 10, and it came in at minus 12.8. So expected at 10, that's a pretty negative number. And what does that do? Again, the treasuries are rallying, so maybe we'll take a look at that. It looks like maybe this 10-year note can punch through the, maybe it can punch through the 113.18 level. And let's see, stocks, I don't think they did a whole lot. Let's take a look at this. Let me just see real quickly if it's worth flipping over to that stuff. We'll get to the charts on this later, but I just want to see if there's anything. I don't see a whole lot. Maybe a little bit of a sell-off. The biggest thing is the treasuries, right? The treasuries are the biggest thing that's moving off of that. Gold continues to rally, as we talked about. Okay. And then here's some of the breakdown on it. New orders, 12.4 prior, 18.2. Shipments, 26.1 prior. Shipments, 6. What else do we have? Prices paid, 18. What's the big drawdown on this? Everything looks okay to me. I don't see how we went from positive 10 to minus 12 on this. Nothing looks majorly bad. Future 6-month business conditions, 36.2. I don't know where that thing went from positive 10 to minus 12.8. But anyway, have to dig into that later. That's a negative number, and the Treasury seem to be the biggest recipient at this point on that. Okay. Back to this gold. Back to the revaluation trade. Okay, so here's the thing. Has someone like a BlackRock or someone been given the task? We know that BlackRock's worked for the Federal Reserve before. When the Federal Reserve took on all that junk debt, okay, from the real estate crisis, BlackRock facilitated. They were the conduit for the Fed. They bought up all the junk, gave it to the Fed. The Fed put it on its balance sheet. And then when the Fed unwinds some of that, which they have unwound some of it, do they use BlackRock still? These are things we're not always told. Again, we get a headline, then we don't get a lot of details on it. Are they doing something like this? Because it feels to me like someone's been told, we're taking gold to 5,000. Just the way this thing trades, I've been trying to short this thing, and early on it wasn't bad, right? You could get a short, and then the thing would come back, and okay, cover your short. Wait, try again. Okay, great. Cover, either cover at a small loss, break even, or at a gain. And it was, it was a pretty productive trade there for a while. Lately, I've been trying it. It's just, you can't do it. And I've been using really small size, just to see, just testing the waters constantly with this thing. Again, longer, it's my bias is to continue to hold silver and gold long, right? But you can use the futures market to offset some of that, right? So let's say you have 10 units of silver and gold, and you're shorting 1 or 2 units of gold, just to, be prepared in case there's a sell-off. You can cover that and hedge it. So if you were to put a hedge on for those 10 units of gold and silver without just dump it on there, that would be a big mistake, because that's all in or all out. Instead, what you can do is whittle away and just take 1 unit or 2 units to short against it. And if you're profitable and you pick up a half a unit, okay, great. Then you move on, right? Get out, wait, sit, hedge again, right? So you're letting the underlying asset go up, but you're trying to short to hedge it. And if it starts to really fall apart, what are you going to do? You're going to go to 3 or 4 or 5 units of short to offset the 10 units of long, okay, that you actually hold. So hopefully that makes sense, how you can use these futures markets when you have the underlying assets. Okay, so that being said, are they trying to take this thing to 5,000? Because that's the way it trades. When you see the momentum pegged like this, I've studied a lot of markets for a lot of years, and I've studied momentum in all different angles, and I don't think I've ever seen anything like this. Maybe for short periods of time, but not like this. Literally the 55 and the hour, the 4 hour, the daily, weekly, monthly are just literally pegged at 99. They're just pegged. Can't go any higher. So the thing you have to wonder is the government revaluing this? And thgoing got someone like a BlackRock in there that they've given the word to, said, hey, look, we're taking this gold to 5,000. We don't want to do it overnight. We don't want to cause alarm. We're going to back you on this. You can trust us on this, right? Get it to 5,000, right? Because there's something going on behind the scenes. with Scott Bessent, with the administration and so forth. I'm totally speculating here. I have no idea if this is the case, but we know that they've done this before with stocks. Under Reagan, when the 87 crash came, they developed this thing called the Plunge Protection Team, the PPT. So the question is, are they trying to do something here? Because this is just not normal, right? This is just not normal. And it's and the thing is too, it's not like it's a very devious algorithm that's running on this thing too. It's very sensitive, and it's very I'll just leave it at that. It's very sensitive, so it's paying attention to everything, and it's very devious as well, right? It doesn't want people riding the train. It's very good about how it tries to shake things loose. I mean, think of like it's got like a cow in the field, right? They got bugs on them, and they got that tail that just, whacks basically to protect itself. I don't know how else to phrase it. That's probably a really crazy analogy, but the point is, it's like it's going to shake stuff off of it, right? And it just does it from time to time, and that's the way it feels to me, right? That it's just shaking things loose, and it's very devious in how it's doing it. Okay. I think we'll take a look at that chart, but it just continues. I mean, it's 42.65. I wouldn't be surprised by the end of the day if it's trading 4,300. And at some point it gets to this thing where it's like 5,000 is just a couple days away. I mean, they're knocking off $50 to $100 a day in gold. So you're figuring, okay, we got 700 more. You're talking what, 14 days? Within the next week or 2 to 3 weeks, and this thing could accelerate toward the end too. You could get some event that comes out, like maybe anything, right? And they could just accelerate this thing to 5,000. So it's very dangerous, right, to come piling in here, and it's very, and look, as a analyst, the good thing is we talked about silver, right? Silver was a decent alternative there for a while because the ratio was so out of whack. And that was a safer play. Okay. Now that ratios come in, which means silver has outperformed gold for a while. Okay. But I feel bad. There's nothing I could do here. Right. I mean, this is absurd, right? This is absolutely absurd. There's something else going on here. There is no way that this algorithm is just buying this stuff like this without some knowledge of something. I just can't believe that you could sit there with your engine pegged at 7,000 RPMs, week after week after week after week after week, and not be afraid that your engine's going to blow up. You know what I mean? And so I keep waiting for that. And when it happens, and if, right? And this goes back to, is this being state controlled? Is this being government controlled? And that's my question. All right. So I'll leave it at that because we'll get into this whole thing with Scott Bessent here in a minute. And this will connect to that stuff. All right. Okay. Keep rolling here. Since I've got these things again, I like having these buttons. Okay. France, no confidence vote. So again, we talked about this. 6 prime ministers in the last, 2 years. Lecornu came in 27 days, resigned. They get it back together. They appoint a whole new cabinet. All right. And now they're seeing these no confidence votes. All right. Trying to satisfy all the different parties there. Okay. We've got Marine Le Pen in there throwing up these votes of no confidence. There was a second motion filed by her on this, and they're going to vote on that sometime today. It's expected to fail, but stranger things have happened. Okay. So odds are, though, this Lecornu is going to get a chance to move forward, and hopefully, right, they're going to have a cabinet that can actually function and actually do something for the people of France. That would be a shocker. Okay, so we're in wait and see mode to see if they can actually get to the point of doing some work for the people, because this thing's a train wreck. We see similar things going on in Japan, right? They're trying to rout this Takaichi. We'll see if she can pull it together, if they can hold this LDP thing together. Just watching these two because they're very similar sized economies. Let me shut this news wire off. Okay, so now gold's, of course, just getting hammered off some news. Let's see what they say here. Here we go. Here's some breaking news. Let me get out of this trade here real quick. This gold is so treacherous. It's just nuts. Okay, I'm going to let it be for a second and see what happens. All right, Tier 1 analysts say, of the 5 reported finalists for Fed chair, let me just flip over to this. There we go. We think Kevin Hassett is the favorite and Rick Rieder is a close second. Wow, so Rick Rieder, that's a new one to me. Rick Rieder is the guy that used to be the fixed income guy at BlackRock, okay? This kind of might tie in. He used to be the fixed income guy, so basically handling all the debt stuff. Big position, because BlackRock's a huge fixed income trader. Back to the Federal Reserve, handling all that stuff. They're the biggest, probably the biggest, if not the biggest in the world. So here's Rick Rieder, the guy that used to handle that. He then took a new role, kind of overseeing the whole everything at BlackRock. right? And all right, yeah, I just got to dump this gold. This thing's killer. Okay, and then and so now this guy's in the running for Federal Reserve chair. I mean, this is nuts. Like this is crazy. If Rick Reeder comes in there, this is bad. I mean, to me, this is like really, this is not good. I don't like it at all. I've never trusted Rick Reeder. I listen to his opinion. We've run clips on him in here many times in the past. You got to listen to him, but I mean, this guy he feels like an Ivy League squirrely dude to me, and I just don't like him. I don't trust him, and so I'll leave it at that. But that's news on me. I did not think he was in any kind of running. That's new. That's new to the game. All right, let's keep rolling here. Okay, all right. Trump has said that India is going to halt buying Russian oil. Right, this has been a big deal because how are you going to get to Russia? Well, you got to find the choke point. Russia's been selling oil to India. Russia's been selling oil to China. You're not going to stop them from selling oil to China. Not where we're at in these negotiations. That's just not even, I don't even think that's on the table. But what you can do is you can influence India to stop buying Russian oil and start to throttle back some of this. Again, start to choke off the revenues into Russia, because India buys a lot, refines it, and then they resell it. All right. So the key is, this puts pressure on both Russia and China, right? It puts pressure back on Russia, and it puts pressure onto China to handle more of their own capacity, okay? Because if you start taking oil off the market, this refining capacity that India has, where are they going to get their oil? And are there going to be issues here? Are there going to be hiccups in this whole thing? And the question is this: has President Trump found a choke point, right? To put pressure on Putin, to put pressure on China, okay? And then to open the door for relations, but put pressure on India. They've been putting pressure on India in a lot of different ways, okay? Remember the H-1B visa thing that was big in the news a couple weeks ago? Well, when I talk to my programmers and we talk about this H-1B visa, in the U.S., they say, this is great for U.S. programmers because we think we do a better job than India's programmers anyway. But the problem is they're so much cheaper that it all gets outsourced there. And then we get this garbage code that comes back in and we got to fix it and make it work. Now AI is starting to do that stuff. So now these U.S. programmers can say, hey, AI, build this thing for me. And then they can plug it in and they can check it. And they don't even have to send it off to India. They don't have to pay any fees. They don't have to do anything. And when they shut down these H-1B visas, what it's doing is it's creating more demand for U.S. programmers that can actually use the AI, right, to create this code. And there's more and more demand, and actually wages are going up for really good programmers. It seems, okay, the demand is up for them. And it's down for India. So, and remember, India's done all these call centers. That's easily replaced with this AI, right? It used to be, the automated voice things used to be terrible. But now if you call in to someplace, they're actually getting a lot better, okay? It's actually getting a lot. They can give it a nice folksy voice. They can give it something else. And you're actually like, wow, that was a better experience. I mean, when you used to call into India, it was like, I can't understand a word they're saying and so forth. So India is under pressure because those call centers, that kind of stuff, all these service-based things could be replaced by AI, and the coders could be replaced by AI. So this tech innovation thing that was really starting to pick up in India might be getting throttled by AI. So they might take a bigger hit out of the gate. Modi may be seeing this and sensing it, and he's like, look, we need to come to the table. We got to try to strike a deal with the U.S., so we're willing to shut down this oil, right, and try to see if they can't get some pressure back on Russia. So this is a good news. This might allow President Trump to, over time, put pressure back on Russia. Again, if it needs to be done. Like, we don't really know what's the real pressure on Russia here. It's probably NATO and Europe and the desperation out of Europe. So are you taking care of the problem, or are you just putting Band-Aids over everything? That's the question. Will India be enough to, quote unquote, solve the war between Russia and Ukraine? At this point, I say whatever it takes is a good thing. Okay, if President Trump can actually pull it off, that's great. All right. So this is where I want to come to next. We want to take a look at that, Secretary Bessent. So we want to spend some time on that today. Wow, time flies. Okay. So let's see who else we have. Gordon Q, TZ, good morning. Jay White, good morning. David Rocket, a girl rated a 10 is a 4 with her own six-pack. Okay, that's the dollar. Gold doesn't change value in real terms. True. I think that's pretty true. I like Jeff Snyder for the Eurodollar information. It looks like the world still wants US dollars. I agree with that. Craig, is Vietnam freezing 86 million people's bank accounts due to people not signing up for digital ID? Yeah. So Aaron Day did a long thing on the digital ID, and it's very scary, right? 17 countries have fallen for the digital ID in the last 19 days, Mexico being first and foremost on that, Vietnam being one of them as well. And so what's really concerning about this is if you remember Event 201 before COVID, it was a very orchestrated event. It seems like they're using the same PR firm, the same marketing information, the same everything. So they're rolling this out in broad measures. And that's what we're watching for, okay, is that what are they up to here, right? We've got Tony Blair involved in this, and he's involved in Gaza as well. So again, tangled webs that these people weave. All right. Okay, and then Trumpet. GA Tech had many H-1B students in their MB program, and they had 95% job placements in U.S. companies. Georgia Tech had many students in there, and they had 95% job placements in U.S. companies. Yeah, so and you say had, right? Like, what kind of a time frame are you talking about there, Trumpet? Is this over the past few years? Is this current? Are you seeing this currently, or are you seeing this over the past 5 years? So I'm just curious on your thoughts on that. Okay, let's take a look at some of these stocks. So we've got, let me roll over to this. Okay, so we have this S&P, and okay, and here's what we have again. We have this upward sloping trend channel. This is what I wanted to show here. Where we're going to have to hustle here. We're going to go forever because I got a couple clips I really want to get through. All right. Okay. Let me darken this up. Okay. So here's the S&P, right? So we've had this, we had this move down last week on Friday. Where in the heck? I want to make sure. Oh, yeah, that was this, right? That was this. So that was part of this. That's what created, that would have been this move down in here. Let me mark this with a rectangle. So this was Friday's close down in here. And then we get this gap open Sunday night up into here, okay? And then guess what happens, right? At that point, you can't draw this trend channel. You don't have enough information, right? All you have is that gap down and this gap up Sunday night, okay? That's what you're getting. Once you see this thing start to top out right here, okay, you might be able to start connecting this low back in here with this one, right? Now you could maybe start to create a trend channel. But then you see it 1, 2, 3, 4 times hug that line. So you're like, okay, I think we might have something. So now you can take this one back in here, okay, and you can connect that to those 4, right? And you can connect it off the bottom down in here somewhere. It's not going to be perfect yet. Sometimes you have to revise these things as they start to unfold. But the key is this fits, right? This consolidative period of time, big swings. This rate is a big range. I mean, we're talking about, 67.15 down to 66.11. So you're talking, you're talking a 100-point range in the S&P. I mean, I don't even know what that equates to in market cap, but that's a big, big swing, right? This is a big consolidative channel range. Usually, right, again, back to let me throw this in there, back to our Elliott wave, okay, do we have that first push down, okay? Was that part of the culmination of what happened on Friday? And then we get this consolidative move from 1 to 2. We're continuing to wait to see if we're going to get a wave 2 down of any substance here. Is this it? Well, odds are that these consolidative channels like this do resolve to the downside, but they got to break first, right? So what are we looking for? At this point, we'd look for something. If it were today, we'd be looking at that level, like 66.89. If it breaks at 66.89 and starts to hold below there, down in this area, then you're like, okay, we've broken the trend channel. However, it looks like it's making progress up into here. Okay, so if it gets up in there again and it starts to break above this thing, it's not crazy to see this thing can just break out on the upside and go, right? Go to new highs. That can happen. But it looks to me consolidative, and it's an upward sloping consolidation. So again, stories to still be told, but right now it's holding this thing. So at least it gives us reference. Okay, at least it gives us reference. And we have the 67.54. Is that what 65.74, right? We have that level down in here, 65.74. Let me just throw that on this one too. 65.74. Won't be perfect, but it's close. All right. So somewhere down in there, that's that white dashed line, okay, that we're watching. That's our reference point, right? That's the old harmonic full upside objective that it came back down and retested. So if this upward sloping trend channel becomes 0.2, and we actually are going to go to 3, it's going to blow through this white dashed line. So again, this is a good line in the sand. If, again, lots of ifs here, right? We don't know what's going to happen. Probably going to consolidate into the end of the month, but can something happen in the meantime that actually makes this thing break? Okay. And if it could still look consolidative below that white dash line. If it breaks below that white dash line and comes back up and retests it and can't punch back through, it would still look somewhat consolidative going into the end of the month. So again, story to be told, but that's where we're at right now. We're just watching this thing. Okay, let's take a look at this. We've got the Dow, right? 2 prior highs to end last year, the beginning of this year, those 2 yellow circles up there. And then we get this. Okay, we talked about this a lot. We tested again, couldn't break through. We talked about this. S&P and NASDAQ racing to new highs, and the Dow couldn't go. Then it finally punches through this purple shaded zone, and then it comes back and tests it, okay? That's the key. It came back and tested it. So is the ceiling now a floor? Is this Dow, does it have a chance to raise to 50,000, this big psychological level into year end? It's possible, okay? Could the Dow get there and the S&P and the NASDAQ lag? It's possible, right? Again, that's why we're just watching to observe. But right now, you could manage the risk in this Dow against that purple shaded zone. And you're talking about what, like maybe, I don't know, 45,500, somewhere around in there, 45,300. And you're talking about a potential move to 50,000. So you're talking about a 5,000 point upside, with a risk of 46.5, 46.3. So it's not without risk. It's about 700 points of downside, 700,000 points of downside in the Dow, with potentially, a 3,500 point upside. So, what's that? 4 to 1, 5 to 1, somewhere in 4 to 5 to 1 risk reward. So it's good. But again, that's a leap of faith. Can this thing rally to 50,000 by the year end? What's going to have to happen for that to happen? Okay. Well, rates coming down, all these different things we're talking about. That's why we try to assess all this stuff. And the other thing we'll see is the S&P, right? So we can use that upward sloping trend channel. If it starts to break above there, that's going to be confirmation in the Dow and so forth. If you're going to take a stab, though, it looks to me like this Dow's looking a little bit stronger and a little safer, too. So if we're wrong, and if the markets do come down, the Dow tends to be the one that holds up better because it's big cap stocks, right? Better balance sheets. It weathers the storm better. So if you still want to be long stocks, but you want to dial down the risk a little bit, the Dow's not a bad place to go because it tends to give you a little bit of protection in there. There's cases where it wouldn't, but generally it does. Okay, again, the NASDAQ, we saw it come exactly back to the 24,165 on Friday. And, it's just kind of hovering in here. Do we have an upward sloping trend channel on that one too? Maybe. We could probably draw something. It's not as pronounced. You definitely see it, okay, as this fills in. You can definitely see it, and you can make a case for it. Let me do this. Let's just draw it off of this, maybe. There we go. So maybe something like that in the NASDAQ, right? We can connect it back in time. And you can see a couple points, 1, 2, 3, 4 right there. You can see let me just mark those for us, just so you get an idea. So you can see what I'm doing here. I'm connecting it off of these, okay? And I'm connecting it to these, all right? And so you get this nice, and then you get the bottoms too. So again, watch this thing, right? Another thing that we can watch, right? To try to, are we making things up? Maybe, maybe not, right? There's definitely some context to it, but the key is at least we have a reference point that we're watching, okay? And we're not just like out in space, right? We have something that we're trying to lean against, right? That's what you're always trying to do, is find something you can lean against. Okay, let's look at this one. We've got Russell. Look at this Russell. It's looking pretty good, right? It's looking pretty good. Look at this thing. It's breaking to all-time highs, okay? And it came back and retested on Friday. And again, it doesn't make sense. The manufacturing indexes should play into this, right? The KBW index, the regional banking index, should play into this, okay? But this Russell looks pretty good today. This thing's starting to make a move, all right? And again, it hasn't participated in a long time. So, and the real value to this is, look at how sideways this thing could have a lot of pent up energy, right? Maybe not the way we look at it, but look at how long that thing's gone sideways since 2021. So it's had 3 years of sideways. Can this thing make a massive move on the upside? This might be one to watch too. Again, we talked about that barbell, maybe leaving out the S&P and the NASDAQ for a little while and looking at the Dow and looking at this Russell, okay? One, the Dow gives you safety, right, from a global flows into the U.S., and the Russell gives you that, that Are we going to get a good base coming from the ground up, right? Small and medium-sized company. Might not be a bad idea to look at this barbell approach and think about the Dow and think about the Russell instead of getting caught up in the NASDAQ and the S&P, okay? This Russell's looking pretty good. All right, let's take a look at this. I wanted to go, so we had some stocks listed in here. Okay, I think UAMY was one of them. Let's take a look. We had, UAMY, okay, going on. Someone had that in there yesterday, going through the roof. Take a look at it. Okay, so a decent pullback. So United States Antimony Corporation, and what is this, a 15-minute chart? A 55-minute chart. Okay, so this was yesterday. Let's take a look at this thing. Okay, here we go. So here's the 15th. Today's the 16th. So that was yesterday. It basically fell apart yesterday, right in there, okay? And so it's actually at a decent spot now. Again, this is one, if you want it on your wish list, this is looking pretty good, right? We've got this gap situation down in here. You can see this gap that occurred, right, basically in that pink zone, and it came right back into that gap space. So watch this level. This would be a decent spot to look at this thing. Again, it's short term. It hit a high of 1962. It's back at 13. So again, you're talking about what is this, like a 7? I mean, if I'm not mistaken, that's like a 35% pullback from its all-time highs. So again, that's the kind of discount we're looking at, right? This thing might be on sale here. This is it. Watch and see what it does. If it can hold this level and trade side, again, you can manage the risk against it anyway, right? The bottom of that pink zone is where I would probably, if it starts breaking through there, you kind of have to get out. And what you'd really love to see is this, right? You'd really love to see this green moving average here, right? Let's just say we project this out into this time frame. It's not real pretty, but if you can get out to the 17th, if you can get to if you can get through this weekend, right? If you can get through this weekend and you get into Monday and this thing can trade sideways across here, again, we're dealing with a short time frame, an hourly chart here. But if you can come across this thing and you can see it hold in this area, now you can have a moving average and you can have that gap, right? So you have two things working in your favor. You can manage the risk against it. So if this thing can hold that level and go sideways and not break below this pink zone, let it work its way into this time frame, it should give you confidence. Like, okay, at least I know that there's something here, right? The market's at least respecting this prior gap. It's waiting for this moving average, price and time, right? Comes back in price. Now it needs a little bit of time, okay? Let the time come in. That would be a spot to maybe pick it up where that yellow circle is in that pink shaded zone. All right, let's take a look at, we've got this one. We had, what is this one? BWXT. That was one that was thrown in the mix. Okay, on fire. Let's look at this thing on a shorter time frame. Let's put this on a 55-minute. So again, looks strong. Had a gap up, and then it's filled that gap. I would say here's where I would want to manage the risk on this thing. I'd look at this prior high back in here, and I'd probably run it across here. And I'd be watching that zone, right? So again, your risk is like around 192 and it's sitting at 204. You're talking about $10 of risk for what kind of upside, I mean, I don't know. I mean, I don't know what to project off of here. I don't have anything to project off of. Let's see if we can get a daily here and just, all right, daily. It's a very aggressive trade. I don't really know what to project off of here. You could maybe project off of this. Maybe boy, that's not even very good. Well, if you come off of that one, it's a 1618. One of the things I also want to do in this educational thing is show you guys how to use Fibonacci's off multiple waves. We did a little bit of that early on. I created a spreadsheet on it, and then I thought, this is a little heavy. We need to do some other things first, and then we'll do this. But that'll be one of the things we put in there. There's a lady called the Fib Queen, Carolyn Baroden. Super nice lady. I'm not sure she's still doing it or not. She might be trying to basically transition to someone else. But she really does a nice job with this, especially on price. She's pretty good at it on time, and she's very good at finding symmetric moves. She does great work, right? She does good technical analysis. Now, I don't know how much she trades, so, she doesn't have a feel for that, but she does good work, and she's really good at doing this kind of stuff. But I don't see anything necessarily that lines up that really gives us confluence at that level. So anyway, So again, this is a very aggressive trade, right? I would try to manage the risk against that pink shaded zone if I could. Prior high, something like that is what I'd be looking at. Okay, let's check this one out. We got another one, PHS. PHYS. Okay, so that one is BWX Technologies. I don't know anything about that one. What is this? PHYS. Okay, so this is Sprott. This is a good one. Okay, so this thing's just on fire, right? I mean, this is a great ETF. Again, Van Eck has good ETFs. The Sprott's a good ETF. The problem is this thing's very, very extended. See these pink dots? Like typically, the market likes to come back and fill this over time. Doesn't mean it's going to happen today or tomorrow, but same kind of a thing. I'd be looking at this area as a decent pullback. So if this is something you want and it's on your wish list, if you get this level, 2720 in this thing, to me, that would be a spot to really take a look at this. If you're in it and it's ripping, let it rip. Who knows, right? We just don't know how far these things can go. I don't know what's in this per se, because I don't know. Is it holding things that the government's going to buy? Sovereign wealth funds are buying, right? That's the thing. Big dollars going into this. Components of what's in this Sprott physical gold trust. And it fits, right? If this gold's going to go to 5,000, this thing's going to continue to participate. So if you're in it, or if you want to take a little stab, you could take a little stab up in here, right? In case this thing's just a runaway freight train. It just goes and goes and goes. Or you can sit and be patient. If you have patience and you're putting it on your wish list, maybe let it come back into that 27 area, right? Where that pink shaded zone's at. It will probably come back into there at some point. But like I said, something's not right with this thing. The momentum is just, it's really running at 7,000 RPMs. This thing's running red line, and it's not stopping, and it just doesn't care. Okay. We've got this one, PSLV. All right, let's take a look at that. Similar story. This one is Sprott Physical. Boy, we got a lot of stuff to get through. I can't believe this. Okay, this one again, high flyer, just ripping. I mean, I don't even know where to measure the risk on this one. You'd have to break this down in a shorter term. You'd have to go to 50. You'd have to go to an hour chart or a half-hour chart or a 5-minute chart to find something to manage the risk against in this thing. I mean, it's just flying. Again, at some point, it's probably going to come back and test this zone, assuming that this is a normal market condition and something isn't crazy going on here, right? And that's always sort of been my caution out there. There could be something crazy going on that's driving this gold. Somebody knows something, and they're just buying it with every last penny they have. Maybe they're even using government dollars to buy this thing. That's the thing we have to question. Will the story come out on this at some point? Sure, once the move is done. Then, of course, the story trickles out over time. Right now, we have to anticipate this, and I haven't been great about it because it's just not normal. This is just absolute. I've never seen anything. I don't think I've ever seen anything like this with the gold market. Okay. Not surprised that silver got to 50. That didn't really surprise me. How fast it got there, a little bit surprising. I thought it would hesitate a little bit more and actually think, right? And actually like let things solidify, but it didn't. It just blew through that one level we had, I think 46.50, and just smoked it right up to 50. Again, we had that 37.93, I think was our upside harmonic level, and it got above there. I said, look, now our job's easy. If it stays above 37.93, just sit on your hands. The problem is now it's at 50, 52, and it did have a big reaction to 50, but now we're losing reference, right? 50 is our reference in silver, right? If it breaks back down below 50, we've got issues. If it stays above there, who knows where it can go, right? But again, it's just moving so fast. Something's definitely going on here. Okay. Something odd's going on. All right, we got one more here. RGTI is a short. RGTI. Okay. Look, that's what I'm doing, right? What is this thing? Rigetti Computing. Oh, okay. So it looks like it looks like the metals. Yeah. I mean, look, I think you're right. Like this is a decent short. You could do it with an option strategy, some kind of an option strategy where, you don't have to pay a lot for it. Boy, that's not good. My Treasuries just got hit. Okay, I don't know what happened there. Anyway, okay, so Treasuries are selling off. They look great, and now they look terrible this morning. Okay, but yes, I think this is a possible sell. I don't know what they do. Are they a supplier to something like Intel or something like that? Like, what do they do? And can it fall apart? This is where it is worth knowing, like, what would have to happen for this thing to come back in? But I would say, like, look, I mean, you can see this prior high. You can see where this thing really took off. It never came back and retested it. So I could see a pullback to 20, 21, 22, somewhere around in there pretty easily. But the question is, what does the company do? I don't even know yet. Rigetti Computing, but I'll take a look at that. Okay. All right. And what I was going to say to Trump Ed on this is, here's my advice. If you actually want to get gold or silver, find a local gold or silver seller and try to create a relationship with them. And again, you're not going to get the best price. So if you see gold at, $4,260, you're probably not going to be able to buy it there, right? You're going to buy it at what's called the spread. So there's going to be the spot price, okay, the futures price, the spot price, the cash price, and then the company that you're buying it from is going to obviously mark that up. The more you buy, the more you can negotiate that price down to spot, okay? And if you're a regular customer, the more you can negotiate that down. So again, quantity you buy, and so if you're a 10,000, and you want to keep it under 10,000 because then they don't have to report. The other nice thing is if you find someone local, you can make sure that they're not reporting it, okay, to the government. That means you can get this stuff, buy it in under $10,000 increments, and not have it be reported, and if you buy a lot, right, assuming, I don't know your situation, but if someone's going to buy a lot and they're going to buy it regularly, you can negotiate that price down so you don't have this big spread. That's the best thing to do. The downside is that they know who you are. They know where you live. That's always concerning, right? Maybe you want to wear a mustache and go in there with a top hat on, right? So that they don't know who you are. You go into looking like Charlie Chaplin or something like that. Okay. So but then that requires a cash transaction. So again, it's not easy, right? The government doesn't want this to be easy, okay? But that's what I would do if I wanted the physical, right? And the key is, how discreet can you be, all right? Otherwise, you're going to buy it from some seller that they're going to ship it to you, and you're never going to be able to negotiate. It's going to be harder to negotiate down the spread between the futures price and the spot price. If you just want to ride this train, you know what I mean, then some of these things like we were just looking at, some of these ETFs are good, right? De-risking a little bit, but they still obviously are doing something right. Okay, the ETFs have the right things in them because they're ripping. Or you can buy a gold ETF, right? You can find them out there. Like there's tons of them, or there's a handful of them, a handful of good ones. And I've listed some of those out in the past. One of the things I should do is probably always have a list of things, that I say, these are pretty good things to consider, you know what I mean? And just be able to flash that list up of, so when we go into all these different sectors, here are the things, right? When we go into the treasuries, here's some ETFs. When we go into energy, here's some ETFs, right? Always have a menu of ETFs on there that we can kind of look at and talk about. And that's my mistake. I just it's just time, right? It's just a time thing. It's been on my mind for a long time, but we'll get there. Okay. So what I want to do is I want to tear into this thing on Scott Bessent. All right. So let's run this clip. We've got this thing. This is Scott Bessent at the Charlie Kirk, at the Treasury, right? So Charlie Kirk's TPUSA guys were there, okay? I think his producer and someone else are there, and they're having a conversation with Scott Bessent. And just listen to this for a second, then we'll come back and evaluate this.
That is a powerful clip. Stevie Miller said something similar when JD hosted the show on the Monday after he was assassinated. And Treasury, I come to find out, coming to D.C., that Treasury has taken an active role in an aspect of this dismantling of the financial networks that are supporting some of these radical left violent groups. Share with what you can. I know it's an ongoing process.
So it's an ongoing process, and I will tell you that after 9/11, Treasury became the driving force behind tracking down the networks of terrorist organizations, how they were financed, how could this have happened on U.S. soil.
Okay, now I just want to stop there for a second. Do I actually have a mic on this one? Maybe I don't even have a mic on this. Okay, let me just keep playing this.
With these international terrorist organizations, where did the money come from? Who were the ultimate funders? And that was on the international side. And Andrew, I will tell you that Charlie's death is like a domestic 9/11. That we are going to find, it has alerted us to what Charlie knew, that these organizations are working within our borders.
Now listen to this. These organizations, just listen to this for a second.
They have a right to organize, they have a right to protest, but they have to do it peacefully. They cannot embrace violence, and we have seen it. We've seen it since the terrible day 2 years ago, the anti-Semitism and the bias that came out after October 7th, 2023. And many of these organizations have been financed by nonprofits. And it's going to stop. And we are going to, as they always say, follow the money.
Yeah, we'll follow
When
the
you
money here in a
see,
second.
These groups where all the signs match, they have hundreds of the same umbrellas that they're using. After they cause the mayhem, they have the same lasers that they're using to blind our police force. How are they constructed? Because this takes a lot of money, it takes a lot of organization, and we are going to do that. We have started to compile lists, put together networks, and there's a long record here. And we don't know how much of the support's coming in from overseas. We don't know how much.
How about your boss, George Soros?
U.S. nonprofits, C3s that give money to C4s. But this is mission critical for us now. Just as after 9/11 and Osama bin Laden, the ultimate culprit, was captured,
of course,
we are operationalizing this here at Treasury, and we are going to track down who is responsible for this. So Charlie's death has set this off, and we are determined not only to honor him, but to keep our country safe and to ensure freedom of speech on both sides. That we can't, as conservatives, we can't be afraid to go out and speak. I know people are canceling speeches. They're having to bring down the size of the rallies. President Trump was millimeters away from death, and he was not deterred. And we're not going to...
Okay. All right. So I didn't like this guy when they selected him, right? And then I said we need to give him a chance. Okay. So I did. But I know his background, right? This guy was the brains behind taking down the British pound with Stan Druckenmiller, working for who? Their boss, George Soros. He worked for George Soros once, he left, he came back, worked for George Soros again. Then when he left again, guess who gave him the money to start his own firm? George Soros, okay, gave him his seed money. All right, so again, it's not like he made a mistake, right? Oh, boy, I was just a young intern and I got a job with, this company and so forth, okay? He made multiple choices here and took money from Soros in multiple different ways. He talks about these organizations that are funding this kind of stuff, right? Why don't you look to your boss, George Soros, the guy that you made $10 to $20 billion for, okay? We know you're smart, Scott Bessent, but the problem is you don't have to look very far, pal. You know exactly who's doing this, right? And this just burns me. When I saw this, I'm like, we have to run this, right? I don't like to get political. This crosses the line, though, because it's Treasury, right? Treasury saying all this stuff. Oh, we're going to track this stuff down. Where have we heard this before, right? This just fuels me to no end. Let's go back to 9/11, since he brought it up. I'm not bringing it up. He brought it up. Let's go back here and listen to our old buddy here, Donald Rumsfeld.
Fail to adapt. And the fact that they can fail and die is what provides the incentive to survive. But governments can't die. So we need to find other incentives for bureaucracy to adapt and improve. The technology revolution has transformed organizations across the private sector. But not ours, not fully, not yet. We are, as they say, tangled in our anchor chain. Our financial systems are decades old. According to some estimates, we cannot track $2.3 trillion in transactions. We cannot share information from floor to floor in this building because it's stored on dozens of different technological systems that are inaccessible or incompatible.
Okay. So that's Donald Rumsfeld the night before the towers were attacked, right? By all these bad guys, right? From who knows where. Look, I've shown this video in here, 9/11 in 2024, right? When I first started the show. And again, in 2025, okay, for 9/11, just recently, all right? And I showed the Pentagon. There are no wing holes there, okay? People say World Trade Center 7, 2 floors. Charlie Kirk's been out, on Alex Jones, right? They've been running these things again of him saying, look, World Trade Center 7 burns for a couple hours, 2 floors. You're not going to sell me the idea that this building just collapsed like 1 and 2. 1 and 2 is a scam right out of the gate, but you can at least, that's almost like halfway viable. World Trade Center 7 isn't viable. And for sure, the Pentagon isn't viable at all. Okay. They got cameras all over the place, all over that place. And they show us one little frame of something going in and exploding into the Pentagon and want us to just buy off on it. You know, no way. It's not happening. And when you actually show the video, and I've shown the video, right, there are no wing holes in the Pentagon, right? That was some sort of a missile. That wasn't Russia. That wasn't wasn't these guys from the Middle East, right? That was our own government, right? Shooting that Scud, that missile into the side of the Pentagon. Okay. This is no different than J6, right? This is no different than COVID. This is the same thing all over again. Scott Bessent wanted to bring this up, right? He's the one that said, like 9/11, okay? This Charlie Kirk thing's like 9/11. How much fraud do you think there is around Charlie Kirk and 9/11? Like how much, there's 50 things we can point out that don't add up, right? The FBI, none of it makes any sense. None of it makes any sense, okay? I'm not even convinced Charlie Kirk is dead, right? I just don't know. He could be, might not be. I have no idea because I don't trust any of them. And I sure don't trust Scott Bessent anymore. I mean, this guy is just a piece of work. He knows exactly where this money's at. He doesn't have to hunt it down. He made that money. He made that money for George Soros, who's been funding this stuff, right? Funding these NGOs, right? The private side of it. Then obviously George Soros has found other ways to inject money in his operations. And again, George Soros isn't the problem. There's someone above George Soros that's directing him. Just like Larry Ellison, just like Sam Altman probably, potentially even just like Elon Musk, potentially like all these people. And this is my big problem, right? We just sit here and we take this, right? We take it. We just sit here and we listen to this garbage, right? And we take it. And I don't take it. I'm not taking it, right? And so it just really burns me when I see this guy. I didn't like him. I tried to trust him. I said, trust but verify. We're verifying. And I don't like what's going on here at all. And yesterday I saw all kinds of stuff come through. The last couple of days, I saw all kinds of stuff come through with Howard Lutnick, Cantor Fitzgerald, what's the name of it? I can't think of it. But again, another story to come down the road, right? And again, they're coming so fast, you can't even keep up with them, right? You can't even keep up with this stuff. It's coming so fast. This technocracy is moving so fast. So I get so fired up over this whole thing with Scott Bessent. I don't like him. I don't trust him anymore. And I'm not giving him the benefit of the doubt anymore. All right, here he is. Let's keep moving on here. We've got this because we got other things to get to. But I just had to rant. I can't take it, right? Okay, so now we have this. We have Scott Bessent and Jameson Greer talking about kicking the can down the road with China.
As the president said, we want to help China, not hurt it. If some in the Chinese government want to slow down the global economy through disappointing actions and through economic coercion, the Chinese economy will be hurt the most. And make no mistake, this is China versus the world.
There it is.
They have put
China versus the world.
Export controls on the entire world. China is a command and control economy, and
we aren't.
We and our allies will neither be commanded nor controlled. They are a state economy, and we are not going to let a group of bureaucrats in Beijing try to manage the global supply chains. As Ambassador Greer said, we had a document and an agreement in Geneva, and magnets were flowing quite well. Some U.S. auto companies have called us in the past week and said that they're going to slow down in magnets. So when we asked the Chinese about this, they said, oh, it probably had something to do with the holiday. Had something to do with the holiday. So they can't be trusted with the global supply chain. Had something to do with the holiday. Moreover, we should this should be a clear sign to our allies that we must work together, and work together we will. There will be a series of meetings this week during World Bank IMF week, and
there we go. There's IMF
week. Not only is China fueling Russia's war, but China's actions have once again demonstrated the risk of being dependent on them, on rare earths, and for that matter, anything. Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps, but all that's going to be negotiated in the coming weeks before the leaders meet in Korea.
Okay, so we could dissect that thing for a long period of time, but Again, one of the key things he said is this is the world against China. Okay, so clearly it's gang tackling. All right, and that's what they were setting up with these tariffs all the time. Okay, and so was this part of a strategy? Is this leading us down a path? He says they're state owned, they're doing this, they're doing that, and I have to ask the question, and we're not, right? You just in your videos, you just said the other day, sitting in front of this whole world, talking about Charlie Kirk, and you're going to get to the bottom of it. And here you are, right, telling us that China's state owned and they're doing this and they're doing, who is China, right? Is it just an actor for these kind of guys, right? For these bad behavior people, you know what I mean? And they're utilizing it, right, to create division, right, for their benefit. I don't know. All I know is something just doesn't add up here, right? And this is just, we could dissect that whole thing right there for 30 minutes probably, right? But I think you get the point, right? I am not trusting this guy at all at this point, right? Not at all. And very little. I mean, I've got 1%. I went from probably 80%. It doesn't really matter what I think, right? The point is, that's, again, I don't want to biases. There's obviously, right here I am ranting. The point is, there are the videos, right? I've tried to break this down and show it to you, right? And expose it. What you do with it is yours. You want to pass it along? Please do. You don't want to? That's fine. You know what I mean? It's your choice. I think you guys are smart people, otherwise you wouldn't be here this morning, in my opinion, right? Again, so you can do with it what you want. You can sit on it and do nothing, or you can pass it around and make the case to people that are close to you and that you care about, right? So that they're aware too. Okay, let's keep rolling here. Okay. So we've got these fears of this $1 trillion AI bubble. Okay, so far. They're talking about going to 3 trillion, 6 trillion, even $7 trillion is the number. Okay, so if we're already being questioning, overvalued, and again, I'm working on this other thing. There's a million things to work on. But that whole deal with the XI and NVIDIA and that circular reference, right? XAI that's Elon Musk buying chips from NVIDIA. NVIDIA is lending them the money, leasing it to them. So they're not buying the chips, right? They're just leasing the chips from NVIDIA. So NVIDIA really owns their own chips. Okay, so it comes back into XAI. XAI buys more, or rents more NVIDIA chips. NVIDIA lends the money back to XAI. XI leases. I keep wanting to say buying. Leases more NVIDIA chips. So it just goes round and round and round. And where does it stop? Okay. It stops until they want to create a market crash. Okay. And then they want to put out the fact that this thing's overvalued. All right. And when that happens, they're going to tell you everything's great. It's all good. It's safe to come in the water. Okay. And so I'm just trying to prep for that day, okay? It could be 6 months down the road. It could be 6 days. Could be 6 years down the road. We don't know when it's going to come, but it's going to come, okay? When this thing is overcooked and they're going to drop the bomb on us, all right? So with that, here's the power that we're putting in these guys' hands. This is what I wanted to show with the AI, with the quantum computing. Now, there's different ways of doing quantum computing. Not here to try to get into the details of all that stuff. However, this is a guy that's setting up shop, okay, with his quantum computing. Supposedly, he believes one of the most powerful quantum computing systems in the world. It's going to be rolled out in Italy, and then who knows where else. Okay, I think there's ties to South Korea. We saw the same thing with IBM, right? Their quantum computer called Heron, and HSBC, right, a big bank, is using this. Okay, so again, this is that division between we the people and the few. Okay, we're not getting a look at these things, but other people are. Here's his quantum computing. Check this out. We'll kind of flow through these things pretty quickly.
As the president said,
whoops, wrong one.
We want to help China, not hurt it.
Manage to quantum
there we go.
computers here in the region, and it will be available to researchers, scientists, businesses in Italy to basically explore how to make the best use of quantum computers. This is a part of the Q Alliance, which was announced yesterday. D-Wave is a founding member of the Q Alliance, and that's all about bringing quantum to Italy in support of their digital transformation initiative.
Let's talk.
Okay. So there's a little intro on that. Let's take a look at this where he talks about 440 qubits, the most powerful computer or most powerful quantum computer in the world, is his belief. Check this out.
So our 4,400 qubit Advantage 2 quantum computer is arguably the largest and most powerful quantum computer in the world. At over 4,000 qubits, we have almost 10 times more qubits than anybody else. And with respect to we recently published in Science a paper.
Oops, I cut that off too quick. hit a wrong button. Anyway, you get the idea. Okay, most powerful computer. We'll come back and look at this. I want to do some research on this just so we understand. Because here's the way I look at it. If I understand what's going on with this to some degree, then I know what the buzzwords are. So when I'm watching the financial media and I hear, or any media, and I hear things pop up, if I have no knowledge about it, the stuff blows right over my head. If I have a little bit of knowledge, it's like, whoa, what's that? And I can actually catch things, right, that are important. And so that's how I, again, you could say, generalist of everything and master of none. Okay. But the point is, that's kind of what you have to do with these markets, right? Sometimes crude oil's hot, sometimes stock market's hot, sometimes gold market's hot, sometimes a 10-year note's hot, right? Sometimes these different markets, like we talked about, you move around, right? If you're trying to outperform, or you can just buy and hold forever, right? Like they want us to do, put it in a 401k, buy and hold, go to work, don't think. Just put it in there and they basically control everything, right? When they go to tokenize all this stuff. And that's another thing we need to get into, is explaining what this tokenization is and where this technocracy is going. And I think this quantum computing ties into that. Okay, so that's why I want to show this. So we got one more clip here.
The ability to perform a computation on a useful problem that can't be solved classically. We have the only quantum computer in the world that is capable of doing that today. I use the word arguably in the context of largest when I talked about 4,400 qubits. And the reason why I did that is because D-Wave quantum computers today are what's called annealing quantum computers. Everybody else in the industry is pursuing a different approach called gate model quantum computers. And while they have many fewer qubits, the nature of the qubit is a little different between annealing and gate model. So we believe that at 4,400 annealing qubits, we are significantly larger than anybody else, because all these other gate model systems have tens to a few hundred qubits. But there's an academic debate around the difference between the qubits.
Okay. So that kind of wraps up our headlines for the day. And the reason I want to talk about that is we've got Scott Bessent, okay, in charge of the purse strings of our country and rearranging the debt markets, rearranging what's going on. Are they doing something in the gold market? Are they revaluing gold? Okay. We see a lot of state-sponsored type stuff. We see this trilogy. We see them buying Intel, right? We see them buying all these things. And it sounds really good because it's all in the name of defense, keeping us safe, right? That's what they told us at 9/11 too, right? Donald Rumsfeld, the night before, says $2.3 trillion goes missing. Apparently we've never found it, because I never saw a day when I watched the debt clock and it went from 37 to 35. I've never seen that money get found. Okay, so apparently it's still missing. Okay, they still haven't found it. Scott Bessent's now in charge of that. He wants to make the connection between Charlie and 9/11. To me, that just means you're just making the comparison between one fraud and another. Okay, because to me, again, Charlie might be dead, and it might, but how he died, if he died, how he died does not make any sense, right? The story doesn't fit. So again, they're the ones that are making this reference between two frauds. Okay, and the question is, they're still not finding the money. Okay. And the problem is, we're continuing to put these guys at the most powerful spots in the world. I mean, this guy's one of the top 10 for sure, most powerful guys in the world. Okay. And the thing is, now we see this power of this quantum computing coming along. And why does this tie in? Because it ties into digital currency, right? It ties into central bank digital currency, right? It ties into the Genius Act, the Clarity Act, these things that they have installed that they haven't explained to us. Most people, I would say 99% of people have no idea what the Clarity Act is, and have no idea what the Genius Act is, and have no idea about the other things that have come out. Yesterday, I did an interview with Mel K. Okay, Mel K is I don't know when it's going to come out, but we did an hour-long thing on this stuff, and I would like to work with her because she's doing a lot of work, right? We have to team up because she has a lot of background knowledge. She does great work. Maybe a little bit hard to work with at times, you know what I mean? Because she's one very focused and goes down her path, right? But that being said, we're trying to open up these channels of, let's share this knowledge so we can share it with people. So we can take a stand, because if we take a stand, we can make a difference. If we don't, this quantum computing is going to steamroll us. This technocracy is going to steamroll us. This digital coin is going to steamroll us. The Clarity Act, that's stable, I mean, all these things, it's all set up to steamroll us, right? And that's what I'm getting very concerned about. So with that, that's Equity Day. Again, we're watching this upward sloping trend channel on the S&P. Keep an eye on that concept. See what happens with this consolidation. All right, we're probably going to consolidate into the end of the month. That's kind of the takeaway on the stocks. I mean, obviously, this gold, these other ETFs we are looking at, the Sprott, the Van Eck, all these things, if they're good, they're going to be ripping right now because this space is on absolute fire. Why? We can make stories for why. Is it natural or is this orchestrated? Okay, I don't know, but I have my suspicions. That's what we're going to continue to try to unravel in here. That's what we're going to try to uncover. And it's, again, they're always unfolding stories, right? We got lots of threads open and we're just always unfolding stories. So with that, have a blessed day, everyone. Come back, try to wrap the week up. Commodities. I want to look at soybeans for sure tomorrow. Again, lay this thing out and maybe it sounds crazy, but every single day I want to look at the soybeans. And most people are like, why are you looking at the soybeans to see what's going on with China? Well, we talked about that, right? What's going on with the Fed might come down with soybeans. It's funny how this can work, but it might be an indicator, just like this gold, right? It might give us a read on things that other markets don't. So with that, have a blessed day. We'll see you tomorrow. And thank you for joining us.